Okay, welcome back to OTTrades. So it's been a while since I uploaded a video last. I'm going to try and start uploading videos again a bit more frequently. And I thought I'd make a video today on identifying trend. Now there's a plethora of videos out there on YouTube or social media explaining different ways on how to identify trend. Most of them use higher highs, higher lows, lower lows, lower highs, that sort of thing. I'll cover that today. But as per usual in the OTTrades style, we're going to go as deep as possible with this in terms of quantifying and objectifying what we are going to class as lower lows, lower highs in order to identify trend. Later on in the video, I'll show you some tools that I've created in order to remove any subjectivity and automatically work out these lower lows and lower highs. But yeah, I'll run through the standard stuff that most people have covered before anyway in terms of how to identify the trend. Some relatively simple ways, but like I said, we'll go into this a bit deeper throughout this video. So if we start here then, so for those of you who aren't aware of the lower low, lower highs, higher highs, higher lows, that sort of thing, I'll run through this basic part really quickly here then. So if we take this move here, so all we're trying to do is obviously the purpose of this video is to identify trends. So here we're obviously in a downtrend, but in my style of trading, I need to come up with a quantitative or objective way to say why this is classed as a downtrend. So it's all good and well saying from this high to this low we were in a downtrend, even to the point where you can say, okay, we put a lower low in here, lower high, lower low, lower high, so on and so forth. But what is the quantitative, what are the numbers behind this move to the downside here? What is the objective reasoning for calling this a downtrend? Again, I use my particular tools to tell me this, but just to cover some of the basic ways that you probably see all over YouTube and stuff like that, we're going to use the lower lows, lower highs in order to determine this downtrend. So all that means is what we've got here is our first initial lower low. So LL stands for lower low. All that means is we've created a low which is lower than the previous low. We've then got our lower high, which is a high which is lower than our previous high. So this is actually our initial high. So this is our starting point. And we've created a lower high. And then we've got another lower low here, because it's lower than our previous low, and a lower high here, because the high is lower than our previous high. Relatively straightforward. However, like I said, I need to objectify everything in terms of my trading. So, for example, here, are we classing this as a low and this as a low? If so, we need something in between those. Or are you classing this entire move from here to the lowest point as a low? Now that might seem pretty obvious, but we are looking at everything in hindsight here. So if we were to take everything here, for example, at this point here you would have inputted your first lower low. And then at this point here, have you already determined that this is a lower high and then we've moved to create another lower low? Or are you keeping things exactly the same as we had before? Like so. And that's, like I said, that's where the tools that I've created sort of work this out for you to remove any bias or remove any subjectivity. Sorry. So we want to keep things as objective as possible. And then again, obviously we've got our lower low down here. Again, you could class this as a lower low and this as a lower high. It's all relatively subjective at the moment, which is what I hate. I do not like any subjectivity in my trading. So that is what you'll see posted all over YouTube on other people's channels. That is how they would determine a downtrend. Yep. And then obviously an uptrend, we've got higher highs, because this high is higher than the previous high, which is either this one or this one here. So that'll probably be a lower high again, because it's lower than this one. So a higher high here, lower, higher low, sorry. That is a H, higher low, because it's higher than our previous low here. Higher high here, because it's higher than our previous high. So it's at this point we're now in an uptrend, because we've posted a higher high than our previous and another higher high than our previous there. Again, where do you determine this uptrend? Do you have a break of the last lower high? Is this now, okay, we're in an uptrend now? What if something like this would happen? You've had a higher high, you've determined an uptrend, and then we put in a lower low. What happens here? Price is just doing whatever the hell it wants. How do you determine whether there's a trend there or not? So I wouldn't recommend trading that way. I would wait for even more confirmation. So a higher high, a higher low here, a higher low at that point is still relatively aggressive to determine that this is now an uptrend, because you don't know, like here, price is consolidated, it hasn't broken above the higher high. You've now called this your higher low. Yep, we're in an uptrend, higher low. Price could then continue down and again input a lower low, because it's lower than everything here. So again, you're still jumping the gun a little bit there if you're going to class this as an uptrend. So personally, I would like to see a break of the previous high and input another higher high. So here you've got a swing to the upside, a swing to the downside, and a swing to the upside. There's now no argument against, okay, if we input a lower low, we were actually in an uptrend here, and now we've input a lower low, this uptrend has been invalidated. Okay, because we've broken above the previous high, price is moving in our sort of predicted direction. Yeah, even though we now, you know, obviously in hindsight, with this, if this move had printed down here, we input a lower low, this now has invalidated our uptrend, and we'd be looking for shorting opportunities. This here has confirmed, right, okay, we're in an uptrend, this is now our uptrend, because we've had this higher high and higher high here. This is now in an uptrend, so we're going to look for long opportunities, if that's what your trading plan shows. Like I said at the beginning of the video, I personally don't trade anything like this. I trade patterns based on my software, which is all automated anyway. So like I said, with all this subjectivity, by automating my my trading, it removes any bias or any emotions from my trading. So yeah, so this is now in an uptrend. So if I delete all of that, hopefully that makes sense. I can cover consolidation as well. So we've covered lower lows, lower highs for bearish moves, and we've covered higher highs and higher lows for bullish moves. What happens if we have consolidation? So let's try and find consolidation. Something here. So we've obviously got our initial high. Let's just start from here. Obviously is higher up here, but whatever. Lower high, lower low, lower high, lower low, lower high. So we're clearly in a downtrend here because of this. And then lower low here, pretty much exactly the same. Lower high. However, now we start to see, let's just call this a lower low. Now we start to see a lower high and a higher low, and a higher high and a higher low, and a lower high, and then a breakout. This is consolidation, or a subjective way of classing this as consolidation. So with all of this removed, again, some of you might be aware, some of you might not be aware of these patterns, but all of this removed gives us a bearish flag. Very, very rough drawing of a bearish flag, and I'll probably get a lot of stick for that, but a bearish flag pattern here. Or again, this is why I don't trade these patterns. I hate the subjectivity around them. Or you could have a bearish pennant, something like that, or even a bearish pennant like this, and then the break of that here is your entry reason. Again, these are simple patterns, but the subjectivity surrounding them I absolutely hate, which is why I don't trade them at all, and that's indicated that right there. How are you going to draw this? Are you going to draw it like that? Are you going to draw it like that? You know, where are you putting your trend lines? It's just a complete and utter mess, which is why I don't trade them. But anyway, that's consolidation. Just wanted to cover that. So you can obviously get the lower highs, the higher highs, and the higher lows in here. That's indicating that there is no longer a trend. When you start getting those higher lows and lower highs together, that's consolidation. You're not in a trend anymore. Another way, just briefly cover it, to very quickly just sort of eyeball the trend, stick a moving average on. Prices below the moving average, we're in a downtrend. Prices above the moving average, we're in an uptrend. Very, very simple, easy way. If anything, I would say this is more objective than the previous higher low, lower high, whatever. Because you've actually got something that you're saying, okay, if price is below this, we're in a downtrend. If price is above it, we're in an uptrend. Whereas before we were determining what we class as an uptrend. Is it when we get too high highs? Is it this? Is it that? Here it's simply, if it's above, it's in an uptrend. If it's below, it's in a downtrend. That's it. Again, not something I particularly use, but just a very quick and easy way to do it. Okay, so now we're on my Metatrader 4. This is my live trading account, and this is my trading software, OT software here, which prints these patterns. Is which I base my trades off of here. And you can see that this is all fully automated. So obviously this pattern didn't complete here. So this pattern completes, went to profit target, so on and so forth. Again here, patterns complete, profit target, patterns complete, profit target here. Obviously the red stands for the stop loss, complete. Turn this off, profit target here, so on and so forth. So this is what I base my trades on. However, what I wanted to show you in terms of the trend is this zigzag indicator here, which is OT zigzag. So all this does, zigzag threshold here is at 12. So all this is saying is it shows you that higher high and higher low based on the previous 12 bars. So this low here is the lowest point of the previous 12 bars. You might say, well, what about here and here and here? It's not taking into account this far back because 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It's the highest point of this previous 12 bars. Now the reason this low here wasn't inputted and then it's moved higher and then down, because this low here wasn't the low of the previous 12 bars, because 1, 2, 3, 4, 5, 6, this was the low. So this low here isn't taken into consideration. See what I mean? This is what I'm on about when I say I need to quantify everything, and this does that for me, and it makes it very easy to visualize the uptrends and the downtrends, yeah, or at least those higher highs, higher lows, lower highs, lower lows, in order for us to say, okay, this is what we're going to call a higher high and a higher low, and therefore once we have one after the other, we're in an uptrend. Again here, so all of this is one swing to the upside. Again, taking into consideration the highs of the previous 12 bars. Why isn't there a retracement? Because this isn't the lowest point of the previous 12 bars. This is. Why isn't this one taken into consideration here? Because this was initially the low of the previous 12 bars, but then this one's overtaken that. so we continue moving to the downside. See that here? The low 64,806. The low here 64,825. Yeah? So this one is now the new low. So this would have been imprinted here, like here. This has been imprinted here. However, if price spikes above this, that purple line will move to the new high. Yeah? So every point here, this would have been the initial high, so the purple line would have gone to here because it's broken above our previous high here. So this would have been the first high. And then as soon as this pattern, this candlestick's closed, this is the next high. So the purple line then moves to this. These ones are then skipped because they're not imprinting the high of the previous 12 bars, so they're not taken into consideration. The next high here, so the zigzag line, the purple line would have been moved to here. Again, we don't have any new high, and then here we have a new high of the previous 12 bars. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Previous high, the new high of the previous 12 bars is here. So price, the zigzag line is inputted here. Now here, price could either move higher and that zigzag line would follow it, or if we move lower here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this is the low of the previous 12 bars. If we break below this point here, the low of this candle here, so if we break below 68,660, a new zigzag line will be inputted to the downside. That's why we haven't had one this entire move up. Even here, you know, this point here, it was a low, 68,470 here, but it wasn't the low of the previous 12 bars. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. The low of the previous 12 bars was down here. We haven't broken below that, therefore there's no new line been inputted. So this is just a really simple way to quickly identify those swing highs and swing lows on an objective and quantifiable scale. Rather than just saying, okay, this is a lower low, this was a lower high, this was a lower low, this was a lower high, that one didn't break it, oh, this was a lower high, this was a... You've actually got numbers backing you up here. You've got quantifiable ways to define these lower lows and lower highs. Sorry, it's a dog shaking herself. So I hope that makes sense. Say any questions, you can either put them in the comments or just drop me a message and I'll reply to that. I know it's a relatively confusing thing to get your head around, but that is the best way to quantify these lower lows and lower highs. So now we can say, okay, once we get a pattern like this, where we have a downtrend here, now to break out that downtrend and get an uptrend, I need to see a higher high, a higher low, and a break of the new higher high. So here we obviously still have the lower high. We then have a higher low. We've then got a higher high because it's higher than this previous one. Not only that, it's higher than the previous 3, 4, 5. But just taking into account this previous high, so we've got a higher low, and another higher high. We're now in an uptrend, yeah? Because we've broken above this level here, we're now in an uptrend. And again, we get the higher low, another higher high, and continue. But at this point on the chart here, let me move this out of the way a bit. At this point on the chart here, higher high, higher low, high high. We're in an uptrend. We're looking for long opportunities. Yeah, whether that's you know, taking into consideration this resistance level here, we've broken through the resistance, pulled back into it, acts as a support. Bullish candle here, whatever, is not really any entry reason I would use. But bullish candle there, enter long, and that's your trade there. Yeah, that's very simple. I've not included any risk management where your stop loss goes, top profit target goes, but it gives you that bias. Yeah, we're now in an uptrend, so our bias is long. We enter a long position, and obviously price goes in our favour. And this is what I wanted to focus on for the purpose of this identifying trend. Yes, we use the higher highs and higher lows to identify an uptrend. It's the quantifying those higher highs and higher lows. That's the important part, and that's what I wanted to get across in this video. So going back to TradingView, I have actually published on my profile some scripts here, which that zigzag line is effectively, this is just a different way of visualizing this. So this script here, number of bars, high, low, breakout, okay? I'm not going to discuss that here, I'm going to apply it to the chart here. My script, number of bars, high, low, breakout. So that is basically, if I put this on 12, so it's exactly the same as before, as what we had on the Metatrader 4, this is exactly the same, except the zigzag line would be inputted. So I'm going to draw the zigzag lines in for you and then show you why in a second. Actually, that would have gone to here. To here. Okay, so this is what it would have looked like using that OT zigzag in Metatrader. This is what the zigzag line would have looked like. It's just a different way, like I was saying. So this is based on the previous high and previous low, the high and the low of the previous 12 bars. So here we have a move to the downside, and every time this red line is broken, this red line indicates the low of the previous 12 bars. This blue line indicates the high of the previous 12 bars. So this line here, obviously you've got the high of the previous 12 bars. So at this moment in time, so this moment in time, which is on this candle here, so although there's a gap above it, in the timestamp, which is the horizontal level, let me get to that point. So this moment in time, if we're trading this live, the previous high, the high of the previous 12 bars is here. Yeah, so we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So out of all of those 12 bars, this is the highest bar, therefore this is the high. Then we move across here, we now got our high of the previous 12 bars has come down because we're now basing it off of this one. Because we're at this point here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So the high is 1.10790, which correlates with this dip here. If this was set at 13, I can show you that now actually, it will go up and stay the same, 13. Okay, yeah, because this was the high of the previous 13 bars. However, we want it both as 12. So we've got a little dip because we're taking into account the previous 12 bars. See, this dip has now come back into play. Hope that makes sense. So here we've got high of the previous 12 bars. That's pretty obvious because nothing behind it is higher than this. And then we move to the downside, and the moment we break this point here, which is the low of the previous 12 bars, we would have inputted a zigzag line to the downside. So this was the previous low, so here. This red line is the previous low of the low of the previous 12 bars. So all the way along here up to this point here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 bar is this one here, but obviously that one's higher as well. Out of all of those 12 bars, this is the lowest point. Therefore the red line is here. But at this point here, this moment in time here, imagine this is alive. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. The low of the previous 12 bars is no longer this one because this is the 13th bar. The 12th bar is this one here, so the low is here at 1.09785. You see where that red line's now come up? This is the low of the previous 12 bars. So on and so forth. So as soon as we break the previous low of the previous 12 bars, we would have inputted a zigzag line. And this is just a different way of visualizing that. So every time you have a break of the red line or a break of the blue line is a lower low and a lower high. Quantitatively. And that is how you determine your lower lows and lower highs. So here we're in a downtrend. lower low, lower high, lower low, lower high, lower low, and then we consolidate for a bit, higher high, higher low, higher high, and now we're in an uptrend because we've had that break of our first higher high. So here we're in that downtrend. We then have a higher high, a higher low. We can't yet call this an uptrend. As soon as we break that higher high, the previous high, we are now in an uptrend. So we're looking for long opportunities now. Hope that makes sense. And again, this is all based on a quantitative way of identifying these trends, and that's what I wanted to focus on. Say any questions, drop me a message. I know, like I said, in true OTTrades style, we've gone way deeper than most people usually take this. However, that's just my style of trading. I need every single thing, every single part of my trading to be quantitative and objective. I don't like any subjectivity coming into it at all. I don't want to have any doubts or anything like that in my trading. Everything needs to be exact, and I need to know everything before it happens. So everything needs to be predetermined. Obviously, not everything before it happens, otherwise I'd be winning 100% of the time. But every single thing that I'm going to do, my reasons for entering a trade, they all need to be predetermined based on quantitative analysis, which is exactly what this does here. There's no, okay, this is a swing low, this is a swing high, this is a swing low, this is a swing high, just because it looks like it. But then I'm not going to include this one just because I don't like the look of it. But it's all quantitative. Okay. Again, thank you for watching. Any questions, which I'm sure there will be, because this, I've made a relatively simple thing quite confusing. So any questions, let me know. Hope you've enjoyed the video. Thanks for watching.